Welcome to Trading Lounge and the European indices, even though we're going to start with the S&P 500 here with the Elliott Wave count on the 4-hour chart. Because I think it's just a little bit important. So for the S&P, the same with the DJ and the Nasdaq and so on, is that we're looking at this as a corrective move up as a wave 4. And we're looking at this move down through here as 5 waves. Now, on the European markets, this 5 waves coming down here is pretty messy and very difficult to count. But what we need to be mindful of with the European markets is that if this count for the US is correct and we're going up here for wave 2 as an ABC into the 2750, 2760 area, and then falling away quite strongly in a third wave, well then that may drag the European markets into that space as well. So just on the 1-hour chart here, we're looking at an A and a B and a C into this green box here. So if this turns lower quite swiftly, or should pick up some speed being a third wave, then it's going to pull those European markets down. So keep an eye on the US, okay? So I've been starting with the German mid-cap for a little while now because the countdown is quite clear in terms of wave 3, an A wave, a B wave, and a C wave. For this market, we're looking at wave 4 moving back up here. You know, in this space here, I know wave 4s get complicated, so we need to be mindful. It may be an A wave, a B wave down here, and a C wave back up here, and then maybe even a D and an E, and get really complicated before moving down. In this case here, I can see like wave 1 and 2 here, wave 3 here, wave 4 here, and wave 5 here. So we've got a bit of a wave 5 wave structure to the downside here. So we should see, you know, it could pretty much pan out like this. You know, so yes, we'll keep an eye on that. So when we look at this particular pattern here on the DAX, that 5 wave structure to the downside, as you can see from wave 4 here coming down, it's pretty messy, you know. I mean, we can see we've got 1 and 2 here and 3 here, and I had this as an A and a B and a C and a D and an E here for wave 4 and down for wave 5 here. So I think that we're on the right track here, but then from wave 1 here we've got an A wave, a B wave, and a C wave that will come back up to the 11,500 maybe. Let's just go to the 1-hour chart to have a look at that. This is what I was thinking here in terms of wave 4 and 1 and 2 and 3. And then all this cacophony over here is wave 4 here and down for wave 5. I mean, this may even be wave 5 of the low here as well. But if I line this up with the US, and the US has already got the A wave in, the B wave in, and looking for the C wave, then, you know, we'll probably just come back up into this space around here somewhere, and then fold over from this space. So I'm suggesting you're probably short already from maybe even over here, or even through here. But yeah, we still got the 11,300 of support. So if this moves up to here and rolls over, then we'll look to short. Well, we can look to go short below this low here, or basically 11,300 as a retested resistance. So short in that way, and that means the market comes down, bounces, goes through, bounces, retests, reference point, trigger, and down from that point. There's no point in going long against all of this supply in here, and also to be on the right side at the right time, we would need this number here, the 11,500, a medium level in terms of the trading levels, as support. So with the US market where it is, and this is pretty much under the main resistance area here, so the market is in resistance. So yeah, it's in a weak spot, so we need to look for short trade setups, but I don't think they're going to come until not next session, maybe the session after. So perhaps Tuesday and Wednesday we need to start to be a little bit diligent on all of this, and we'll see how we go. So expecting it to go higher, but then it can roll over lower from that point. And the UK is the same as well. So wave 4 here, looking at all this is 1, 2, 3, 4, 5, down for 1, A, B, C for 2, all the way down for 3, an A and a B and a C for 4, and down for 5 in this case, and looking for a move back up here. In this case, we've got 7,000 as the support, not the resistance. So we've had spikes down, but we haven't had any retest down. So basically a move down, bit of a bounce, perhaps move down, retest there. This becomes the reference point low here, and if that's breached, then go. I mean, these are reference points low, but they haven't been breached, so they haven't triggered anything yet. So we want this to migrate from being support to resistance over here. I have got this as an A wave here and possibly a B wave here and a C wave up here for wave 4. And it's not that silly, and maybe the European markets can do that. The Asian markets are doing that, or some of the Asian markets, if I can just detour for a second and look at the strongest one in Asia, which is India. So with India here, from the low here, we've been looking at this as an A wave up and a B wave back. So in the US and European markets, we've been looking at this wave 4 over here and moving down, but we've been looking at this differently. So an A wave here, B wave here, and a C wave moving up. So with India here, we've still got further to go up here. So it can, quite happily sort of move up into the 11,000 area. Japan is a bit like Australia. It's sort of slugging at the bottom here, and we could call this 5 waves down in terms of 1 and 2 and 3 and 4 and 5 to here, and then a little up here. So that's why we're going to look for shorts under the current low here. So it may just follow the US markets and just move up to here and then move down. So we'll be on that side here with this, and Australia's much the same as well, I think. So we can look at it in terms of an A wave up here, a B wave in 3 waves here. We're also looking at it in more of a bearish picture like the US with wave 4 here, and looking at this as wave 1 to the downside here. In fact, this wave 1 can be over here, but I'm just lining up the A, the B and the C here. So every country, every sort of block of countries, I guess, have got their own sort of thing. They're all kind of the same, but some of them can all be doing different things at the same time. So it's a little bit tricky at times. It's nice when fear mode is in, they all pretty much do the same thing there, and they all look at each other. So back over to the FTSE here. The move down through here, it doesn't look impulsive, even though I've got it as 1 and 2 and 3. It's got more, it feels more like a corrective move to the downside. And I don't want to short it above the 7,000. That just doesn't make sense to me. It's, I mean, I'd be looking for long trades if this top got broken out here. And we will, but we would want a nice support on the 7,100, which is a 61.8% retracement level from the top to the low here. We'd want that as support. Then we can trade up to 200 at that point. But we're far from that at the moment. And France is much the same as well. So France here, we can look at it as wave 4 over here, and 1 and 2 and 3, and it gets all of this in the European markets is a bit messy. So if you've got another count for this, it doesn't really matter. But the main point with all of these is that we need to short them at the right time, and that means in this case here, if we're going to short this, we'd want a reference point low below the 5,000 to take out. So I can pretty much remove this one here, because a retest has got to be, a reference point has got to be in the same swing. So like this one, if the market came down and found that reference point as a low, It has to go up and then come back down. The same with this one here. This one here is not part of this one. It's a different trend. So this one will have to come down. Reference point is in, go back up, and then come down. So this comes down now. It would need its own reference point again. So we don't need, whoopsie-daisy, we don't need that there as such. Oops. And also Italy too. We're already been short on Italy, on the MIB. So in this case here, it's quite good because normally when you see this come down here, this has moved quite freely down here, hasn't it? And this has moved freely, and then this is gets all congested within here. So normally I'd be pulling out of a market like this, but the positive for this on the downside is that if we take another different look at it, is that at 19 here, looking across 19 here, it was support over here, wasn't it? And now it's resistance in this space here. So it's migrated from being support to resistance. So yeah, it could still rally and do its thing and whatever, but we'll stay on the short side of this one. This is a very weak market, and it just needs the influence of those other markets to send us to the downside. If you're not short in this at the moment, then you can also look to enter into this space, because this would be, this low here would be down, back, and a retest. So if that breaks lower from there, by all means be short from there. All right, I'm just going to leave it at that for the time being. Thanks for tuning in, and don't forget, it's probably more important to track the US market, the S&P and the Nasdaq, as the Nasdaq will probably lead to the downside. Okay, cheers.